Make your move, cowboy.
I got the horses in the bag, horse stock is attached. Head is matted black, got the bushes black to match. Riding on a horse, ha, you can whip your Porsche. I've been in the valley, you ain't been up off that porch. Now, can't nobody tell me nothing. You can't tell me nothing. Can't nobody tell me nothing. You can't tell me nothing. Yeah, I'm gonna take my horse to the old town road. I'm gonna ride till I can't no more.
Hat down, cross town, living like a rock star, living like a rock star, living like a rock star, living like a rock star.
Guys, good morning. July 2020. Great news. We're about to make a boatload of money this week. So position yourself. Pay close attention to what we're about to mention to you in this video about some specifics, and you will rock this week. So again, just because the whole world has gone crazy does not mean that you have to. We're observing a strong pattern of less bullish moves, which actually ended a potentially bullish sequence with a rather bearish ending on a Friday. We've locked in a move 5 where the market practically didn't do nothing. Besides moving up and down 10, 15 points in each direction, the market just stalled out right around the level of 3,200. So this is meaningful because we've had a situation where we've been seeing some move 8s and 7s over the course of the last few weeks have been dominating the market with an increase in magnitude, and now this pattern is completely evaporating, leaving us with nothing but a drop-off in the market right here. So this is going to be an awesome week. We could stay some huge moves in the market this week to the downside, guys, and can come rather unexpectedly as the complacency in the market is so freaking elevated. So breakout pattern is not going to materialize. So the market is banking right now on the fact that it's a cup with a handle. It's going to break out and the market is going to just march higher and higher. Well, we believe exactly the opposite is going to happen. We're fixing to get a failed breakout pattern. We've noticed it last week in many stocks that the banks or institutional investors would typically buy, but they stopped buying them. At the same time, it coincides with a move 5. Guys, I didn't put all the tickers. There's a ton of them we're going to discuss in the earnings section of this video, so be very careful. Don't just look at the tickers here. We actually got a lot more trades we're going to cover today. So, and number 3, green moves don't cause VIX to break lower. That's been the theme for the last few weeks, is the fact that the market moves higher, but the VIX fails to break key level of 26, 28, right around there. It's just no matter what the market brings to the upside, VIX fails to drop. We know that bull markets don't happen when VIX is trading at these freaking elevated levels closer to the 30 level. And with that said, despite of a, so far it's what about 6:30 in the morning on Monday, July the 20th, as I'm recording this, we gapped up on the VIX, and we've surrendered some of the gains in the VIX since then. Okay, however, pay very close attention. If the VIX is not going to close that gap up that it's creating pre-market, guys, it's on. I mean, the game is on. You want to start buying puts on any sort of bounces without any blinking eyes. So let's roll. Okay, the only thing we're bullish again is mRNA after locking some huge profits on that thing last week. IBM could be a really good trade. We'll discuss that further. Netflix bounce, fails to close the gap. It's not a healthy sign. At this point, don't expect Netflix to drop like $50, $60, but any bounce in Netflix is likely to fade. So let's say it hits a level of, you know, it's right now pre-market about 490. Let's say it moves up to 495, 500, short it there. You got probably about a $20 move with Netflix back to the 480 level, potentially 470. So use that lower trading level in Netflix. Options are not going to be as ridiculously high as they were last week. So even with a few contracts, you can make a few $1,000s pretty easily on Netflix throughout this week. So here's what we've got. We've been talking about this cup with a handle failed pattern, and I'm going to actually walk you through a few examples right now showing you why this indeed is still the case in the market. And as long as this is the case and we're getting these less and less bullish moves, okay, as opposed to a highly bullish 7. We're getting a weaker 7 with a smaller magnitude for a number of days. We're getting a weaker 4. We're getting something that finally resolves into a move 5. That does not equate to a breakout in the market higher from here. But most of the institutional investors, they seem to be talking about that sort of thing in the news, in Bloomberg. They're talking about it on CNBC, any pretty much news media coverage that you could be listening to, guys. They're talking about all these stuff. Now, with that lies the great opportunity. Here's an example of these. Domino's Pizza. Domino's have been a great favorite among institutional investors, clearly portrayed by this chart. Even when the market was dropping like crazy, this stock failed to drop like crazy. It did drop just like the rest of the market, lower, but nowhere to the magnitude that the market has dropped. So since then, very solid pattern higher, and just keep buying and buying and buying this damn thing, just no matter what. But something just changed, okay? So if we look at the last time Domino's reported earnings, we had a huge gap up, right? From under 300 goes basically to the moon to about 380s. And it looks like this was a really nice setup, right? Really nice setup. You can call this a cup with a handle pattern. So imagine that this is the cup formation up till here. This is your handle. And now here's the breakout. So they're buying this Domino's favorite an expectation of great earnings. And this is the climax. This is the peak of this chart above 4, actually pre-market, if you take closer to 1 day, 1 minute chart that day. It was trading at 427 briefly, and that's when we actually mentioned in the daily video that was a great idea to actually bet against Domino's buying the 410 and the 400 strike puts. By the way, those guys, if you took that trade in the 400 strike, they were selling for $1.50. We're able to sell them on Friday at $9.50. So actually they were going as high as about $10.50, but we're collecting about $9.50. So easy, 700% gain, guys, right there. Okay, based on the simple trajectory that we've been showing you in pretty much every video over the course of the last week, ever since we've noticed this trend in the financial sector. So the bottom line is this: you got a solid cup with a handle pattern. You've got also, please pay close attention to this. Domino's did report excellent earnings. It reported strong numbers both on revenues. It reported strong numbers on earnings per share. In other words, report was excellent. But the stock, despite of this bullish pattern, despite of the great earnings report, it reversed, okay, despite of being institutional investors' favorite. So it had everything going for it, and yet it failed to break out, okay? So use this, print this out, understand this. While all of this stuff was forming, there was clear divergency on the RSI. So the stock used to trade at the 370s. It gets to 427. RSI does not follow higher. Boom, there's your divergence right there. Got the def hook right there. And clearly banks are starting to take the money out. You can see it on the accumulation distribution. Now, Goldman Sachs, pretty much identical situation, right? Goldman Sachs, after the banks were reporting these horrible numbers earlier in the week, JP Morgan, so on, okay, all of a sudden, Goldman Sachs is like, hey, we made a bunch of money on trading. Hey, so the market is cheering, and as the market is cheering, they're like, hold on, well, that shit is not going to last. And they're taking the money out of this damn thing, okay? And when taking the money out, creates this black candle, followed by 2 days lower. Now, understand that Goldman Sachs and Domino's Pizza are entirely different sectors, but yet they're showing you the identical pattern. Look at this. Here's your cup with a handle. Here's your possibility of a breakout right here, okay? On a great earnings report would be a great catalyst for a breakout, but if it cannot break out on one of the best earnings reported, especially in contrast with all the other banking stocks, okay? These got to be the damn favorite right now in the banking stocks, but it reverses the hell out and goes lower. Okay, so despite of what? Despite of this potential breakout higher that you could see between the blue line and orange line, this potential could be a highly bullish breakout cross formation right here, but it fails, okay? You got similar conditions to the chart I've just shown you on Domino's. You got potential def hook form right here. Look, accumulation. While the stock was moving higher, what was happening here? They were really selling it. So if you're looking at the price section, guys, if for whatever reason you're not taking charge of the versus course yet, if you have not reviewed it in a while, you got to make sure that you do it this week because it's going to do you a lot of good to understand this chart pattern. So overall, highly bullish pattern again, fails to break out. Two stocks, same pattern. Same pattern. Do you see that the pattern is the same? It's a failed breakout. So now that we're getting confirmation, not just in one sector, but now we're getting confirmation in multiple sectors, we can actually lead over tons of stocks that are fixing to report earnings this week. So the pattern is very simple. It's a failed breakout pattern from the cup with a handle. And it's confusing as hell because it's just such a highly bullish pattern. Everybody's blinded by it, okay? Everybody's thinking, oh, the Fed is buying. We got to keep buying. Nobody's got brains on their own, and it creates perfect conditions for short selling opportunities in the market. So pay close attention because very much so, IBM could create this similar pattern. Lockheed Martin could create similar pattern tomorrow morning. So this could be some highly lucrative trades, guys. You see the blue dot, those are the stocks we're actually interested in trading. Some of the other stocks in here, they're just for making some observations about what's actually how institutional investors are responding to some of the earnings. So for example, UAL, we're not going to trade this deadbeat thing right here, but we're going to pay close attention to how institutional investors are reacting to that. Okay, COF could be a very easy trade, could be the same type of trade as we've seen with some of the other banking stocks. This could be initial pop followed by a drop. So all you really have to focus on, okay, focus on trading options, weekly options on these stocks that I've got highlighted with the blue dots right here. Focus on studying the charts and focus on this because if you see any one of these things, okay, they're popping higher, just in case I've shown you with Domino's Pizza, just in case I've shown you with Goldman Sachs, okay, they're likely to reverse and drop. Now, the killer opportunity lies within because you capture the bigger magnitude of the move. And guys, I'm about to post a video here in the next 48 hours that you absolutely must watch. It deals with exit and entries to help you guys get better at your execution. And a part of that video actually is going to reveal to you how to capture the bigger size of the move, or actually how to focus intraday on the bigger size of the move. So instead of catching this, which actually is going to happen a lot of times, these stocks after earnings, when they report earnings, you see that this move, the initial pop, is going to happen after hours or pre-market. So trading options, you're not going to be able to capture that. You're going to have to wait till the market opens. But when market opens, don't be blinded by this potential bullish move, even if the earning report is great, just as I've demonstrated you with the case with Domino's and Goldman Sachs. They may pop initially, but what follows over the next 72 hours is a total unwind where institutional investors are actively taking their money out of these stocks. So it doesn't matter how great the earnings report could be. Expect some wild swings, expect some wild reversals. And so instead of capturing, let's say, this move, and instead of buying options ahead of earnings, what you want to do these earnings season is you want to wait. Wait. Don't do it. Damn it, don't do it. You want to wait till they announce earnings. You want to short them the next day if they pop. Okay, so far, the only stock that's been an exception to this sort of trajectory has been Netflix, because initially it dropped and then it popped. So you want to catch it on the follow-through pop. That's where you want to short it. Okay, so easy stuff, guys. Overall, most of the stocks are going to show this pattern right here. So far, okay, just to give you a couple more examples, some of the stocks are going to be reporting stuff today. So for example, PetSmart, you know, PetSmart, whatever the hell this is, the focus here is on the chart. So the stock is topping right here. It's likely to be a failed breakout. It's going to result possibly initial pop followed by a reversal low. Now, you know, we don't trade options on cheapy stocks like this. I mean, you certainly can observe to see this is another different sector. That's why I inserted this chart here, because you want to observe to see if various sectors are creating this type of pop and drop scenario. The more sectors are participating in this type of behavior, the less likely the chance of the S&P 500 overall are to move higher and evolve into a breakout higher. So the more sectors are showing failed breakouts, okay, the closer we're getting to a drop-off in the market. So don't be fooled by this current complacency. So Lennox, here's another stock that's likely to stage a pop and drop. Now this one is highly similar to the chart of Goldman Sachs, right? So we got a very deep cup, we got the handle, we're getting close to a chance of breaking out right here. And watch out, even if this damn thing, Lennox right here, whatever the hell this is, just focus on the chart. That's the most important thing, not the news, the chart. Okay, even if it reports great earnings, okay, you can still stage a failed breakout like this, just like Goldman Sachs. All the other factors that we describe in the Goldman Sachs charts and the DPZ charts, they're here. For example, RSI, it was trading at a lower level. RSI was here, now it's gone, the price action has gone higher, but the RSI failed to drop. Like, there's a ton of divergences here, guys. We don't have time to review all of them, but if you're not familiar with charts divergences and what they represent, make sure you click the link somewhere below. Make sure you take that charts divergences course, study the hell out of it. HAL, okay, again, we're not trading cheapy stocks here, okay, but this is a oil sector stock. We want to see how institutional investors are going to be responding to Halliburton earnings. This is not quite coupled to handle. This is actually, the pattern here going into a bullish crossover is the same as all the other charts I've shown you, but some other characteristics for a couple of the handle are not met here, and so we're clearly not back to the level of from where it started dropping off at the first part of the potential cup formation here. So it's not quite with a couple of handle, but it does share some characteristics here. The point of watching this to see if it makes a pop and then it reverses, and if oil sector is going to participate in the pop drop type scenario as well. So next market move, guys, for today is going to be 12, 11, or 6. Now, it may be a bit confusing. Why would we have 11 on 12? So let me break this down to you. So overall, the market is sort of set a floor about 21.90 over the last few days, and it's been reluctant to drop below that. Okay, and the possibility is we could basically drop just under that, maybe touch a level about 31.80. We can touch a level of 31.80 here and bounce back up. Okay. Now, another composition of the market move today could be the fact that, yeah, we could open, and in the case of the 12 move, you guys know, we gap down, we go a little bit lower, but by the end of the day, we finish where we started. Okay, overall, VIX is going to jump when we're going lower, especially if we break just under the 31.90 level. Everybody's going to be thinking like, oh shit, here it comes, we're breaking that level, and so on, we fucking bounce back up there. Okay, so don't let this fool you. In other words, the idea behind the 12 move, it's not a crazy bearish move. There is no crash. There's no crash yet. Okay, but okay, don't get fooled, because there could be easily a crash tomorrow based on certain market conditions that were observed with the 13 markets move formula. Okay, don't expect a crazy fucking move in the market today, but be positioned to a potential unwind, because we're gonna actually see a potential repetition of the pattern that we've seen. Okay, last Monday, last Tuesday, where the stocks, they were initially opening higher pre-market, and then they sold off like crazy. So we're going to see, because this could be a pattern that we could see over and over again going from here into Mondays. We've had a solid pattern over the course of the last 60 days where pretty much every Monday has been a green day, and we're noticing that last Monday there was a beginning of a shift in this behavior, which could continue into today's Monday. So with that said, okay, overall, we're not expecting the market to break above 32.26. If we do get to 32.26, you know what to do. We've talked about it all week last week. You just want to short the damn 32.26 area, and anytime we drop, you want to collect the gains from there. Okay, so at some point this week, though, we will break that 31.90, 31.80 level, okay? The market is sort of in the waiting mode, trading sideways in expectations of further news from all companies reporting earnings. So any sort of disappointment could be a catalyst for the market to actually break that level lower. Now, levels for July 20th, 21st, guys. So 32.26, we just covered that. You want to short the hell out of this yellow line when we get to the yellow line, if we get to the yellow line. Okay, now we may not. So taking some positions at a level of about 32.10, 31.15, okay, is wise if you just stair step, okay, because we can easily reverse and visit today the target at some point intraday. If we're going for that move 12, we can easily visit this 31.82, which would be the lowest point of the day in the intraday move, and from there we can bounce back up and revisit that 3,200 level again. So don't anticipate a huge, crazy, wild move, but do anticipate for the market at some point this week, possibly as early as tomorrow, to revisit this level of 31.31, which has been a very crucial and key level for the market. Okay, 31.31. If we break that by the end of the week, we can easily end up at 30.40. So we've got about a couple hundred points on S&P, which would equate, about 700-800 points on the Dow. So we can easily make that move. Now, depending on what the VIX does as we're going through these levels, okay, there is an insane opportunity to profit, because there is a probability that instead of 700-800 points on the Dow, we could actually give back about 1,500, 2,000 points. And there's a lot of things that are pointing to this. The question is, okay, how quickly will this rate of change come? And there's something on the 5-day, 15-minute chart I'm about to share with you guys, which points to that this larger size move indeed is ripe for the making. Specifically this week, July 20th through the 24th, could be the week of some wild freaking moves. Now, this is what we're expecting. So after move 5, which overall is a green move, guys, you see that, man, you can't even see that it's a bullish move. Okay, because look what happens to VIX. So on Thursday, VIX closes out at 27.55. On Friday, VIX is just barely, it just barely actually closed below that. So 27.47. So this is and we wanted this divergence. That's why we're sort of prepared for a move 5, as I sent it out in the alerts in the morning that was going to be a move 5, guys. Basically warning you to stay away from trading. Move 5 is not good days for trading directional options, period. But the idea here is, considering this is a red move and this is a green move and VIX barely is shaking, okay, this tells us that the story of these divergence of the VIX, what we've been noticing playing out to a great extent on certain days, less extent on some other days, okay, it is very much a behavioral characteristics of the current market conditions. And so we're very much close. Maybe today could be the last day of a smaller move before we actually could accelerate, okay, exiting out of this sideways trend. And it's not going to be to the upside because of what I've shown you with these multiple charts. We're going through a failed cup with a handle pattern, and as more sectors participate in this failed cup with a handle pattern, it is going to be clear that the move is not going to be to the upside but to the downside from this key level of 32.26. So anytime we get there, you want to short the market. So complacency is absolutely freaking amazing. You've got to love it if you're short solid, guys. There's so many things to be excited right now about this stupid market. So July 17th, Friday. It's a move 5, okay, magnitude of the move decreases on each direction. This is how it looks. This helps you understand why it's at the move 5, guys. Move 5, you're going to have smaller size move throughout the day. Typically, it's going to be contained within a certain range, as clearly has been the case over the last few days. The market's been playing around plus, minus to, 10, 15 points. Upside to downside for a level about 3,200, okay? So we open up at about 31.14. We close at about 31.15. So basically nothing has taken throughout the whole day, and there's been no crazy moves to the upside or downside. It may look big on this chart, but all it is, guys, it's just 10-point move, 10-point, 13-point move. Nothing significant here at all. So 2-day sequence is 3-5. What is meaningful is, after a move 3, that's a decent size magnitude move. Typically, you'd either get like a strong bounce, you go into like a 4 formation, you go into like a strong 7. But no, we get a weak 5. A weak 5, move 5 is, if we measure the level of bullishness of the move, move 5 is your least bullish move. So the fact that after a 3, we're not getting a strong green move is telling us a story that the market is absolutely freaking exhausted here, and it could collapse at any freaking moment. Okay, so here's your move 3. We gap down, okay, and then pretty much sideways trend for the rest of the day. In this case, we're just flat for the day, period. No gap downs, no gap ups, just nothing. 5-day sequence, 6, 4, 7, 3, 5, guys. The meaningful part of this sequence is at this point, we can have a mirror sequence basically following exactly what has happened on Monday and Tuesday last week, considering that we are in a Monday Tuesday type scenario again. Don't be surprised if particularly we can get some wild move like this, especially going into the last part of the trading session between 2 and 4 p.m. today. Okay, so be ready, position yourself for something like this, stair step in some of these positions, even though it's going to look like the market just wants to play around with this level of 3,200, 3,210 again. There could be a wild move just practically mirroring this move that was happening last Monday, but maybe just a slightly different time frame of the day. Now notice after that wild move comes, the next day we're getting a follow-through move lower on the move. So considering the levels are almost identically matched, it would be reasonable to see the market somewhere at 31.31 possibly by tomorrow. And if that level is broken and stronger volume, pay attention to the volume. We can easily end up substantially lower by the end of the week. So all the stuff that's been developing around this level of 32.26, basically, guys, have been a head and shoulder. There's been multi-top formation developing there. We discussed that in the last few videos. So that is still the case. VIX is about to break out to 50.55 this week. Okay, this move, huge move in the VIX could initiate, it could actually get started today. And again, this level of 36.18, as soon as we are closing above 36.18 on the VIX, we can get a huge move to the upside. We can easily put VIX above 50. So don't let the current complacency in the markets fool you guys. We've got a ton of trading opportunity with these earnings. Focus on this pop and drop time pattern in multiple sectors. Do not buy options before earnings. Buy them on the second day when the companies actually announced earnings already after hours or pre-market. Try to get into these positions after the earnings has been out of the way and the options have taken the depreciation, guys. So play smart. If you have any questions, make sure you click the link below this video. Schedule a 20-minute coaching call. Let's roll, guys. This is going to be a big week. Okay, stay sharp. Go work out. Clear your mind. Okay, this is going to be an awesome freaking week. I know a bunch of you guys are going to make a ton of money. So let's roll. Fuck it. Let's do this. It's going to be an awesome week. I'll catch you guys in the next trade soon.